All right, today we are diving deep into a theory that's been making some serious waves online. It's all about a massive geopolitical financial trap, a global chess match that's being played not with armies, but with precious metals.
And just to set the stage, the source material we're looking at, well, it doesn't pull any punches. It kicks off with this quote right here. So this isn't framed as just some market analysis, it's being presented as the final chapter for an entire economic era.
So that really is the million-dollar question, isn't it? The whole theory claims there's this deliberate, really complex strategy in play designed to drain the West of a resource it absolutely cannot live without. So let's unpack the mechanics of how this is all supposed to be going down.
Okay, so the entire theory kicks off with this concept its authors call the Great Silver Vacuum. And it all boils down to a huge and, they claim, unprecedented price difference for physical silver between what you'd pay in the West versus in China.
Now, at its heart, this theory is really just simple math. The people who put this forward claim that the paper price of silver in New York is being held down, while the price for the actual physical metal in Shanghai is way, way higher. And that difference, right there, creates a massive opportunity for profit.
The source boils this whole gap down to one number, up to $34. That's the alleged risk-free profit you can make on every single ounce of silver you can get your hands on in the West and flip in the East. A profit margin that big? Well, it's presented as a force of nature, something that's almost impossible to resist.
And that irresistible force leads to this, the alleged consequence. The narrative describes this whole thing not just as a smart trade, but as a historic, once-in-a-generation transfer of actual physical wealth being systematically sucked from one side of the planet to the other.
So you've got to ask, who is physically moving all this metal? And here's the twist. The theory doesn't point to some shadowy government agency. Nope, it points directly at major Western financial institutions. It claims their legal duty is to make money for their shareholders, and if that means executing these trades, well, business is business.
The source material even maps out the physical journey. Old silver bars are supposedly being pulled from Western vaults, flown to Switzerland, melted down, and then recast into new bars with Chinese stamps. And the moment they get logged into the Shanghai exchange, they are, for all intents and purposes, gone from the Western system forever.
But here's where the theory takes a really interesting turn. It argues that silver is just the bait. The real weapon, it claims, is gold, and specifically a huge undeclared stash of it that's being held in what the source calls a shadow ledger, totally off the official books.
And the difference here is just staggering. Officially, China says it holds a little over 2,000 tons of gold. But this theory, which claims to be based on a forensic audit, alleges the true number is actually closer to 30,000 tons. I mean, that's not just a rounding error, that's a whole different ballgame.
So how in the world does the source get to that 30,000-ton number? Well, they say it's not just a guess. They claim they've crunched decades of data, adding up China's massive domestic gold mining output, which never gets exported, and then meticulously tracking all the physical import data from big hubs like Switzerland and Hong Kong.
So why hide it? Why all the secrecy? The source points to this classic line from Sun Tzu's The Art of War. The alleged strategy was simple. Quietly build up this massive war chest of gold at lower prices without tipping off the market and causing the price to go to the moon before you're done buying.
And all of this quiet accumulation leads to what the theory calls the end game, the financial military parade. Now, we're not talking about tanks rolling down the street. We're talking about a press conference. The moment China supposedly just updates its balance sheet, shows the world its real gold holdings, and in doing so demonstrates its incredible economic power.
The immediate impact of a reveal like that would be, well, seismic. At 30,000 tons, the Chinese yuan would suddenly look like it's 40 to 50% backed by physical gold. The US dollar, by contrast, would be backed by less than 1%. It's all about perception, and overnight, the perception of which currency is more stable and trustworthy would completely flip.
Now, let's connect all this financial theory back to the real world. Because the third part of this trap isn't just about money or markets, it's about running out of a physical material that our modern world literally cannot function without.
The core argument here is what's called a structural deficit. For years now, the world has been using up way more silver than it's been digging out of the ground. We've been covering that shortfall by dipping into our savings, our above-ground stockpiles. The central claim here is that that savings account is now basically empty.
And here's the kicker. The demand for silver is what economists call inelastic. You can't just build high-tech solar panels without it. It is essential for advanced military gear like missiles and fighter jets. It's in your phone, your laptop, pretty much all our electronics. There are no easy substitutes.
And this brings us to what the source calls a critical vulnerability. You see, decades ago, the US government sold off its entire strategic stockpile of silver. It's gone. Which means today, the military and key industries have no emergency reserve. They have to go out and buy this critical metal on the open market, competing with everybody else, at whatever price happens to be.
So if this theory is even partially correct, how does it all end? The source doesn't predict just one outcome. Instead, it lays out 3 possible scenarios for what it calls checkmate.
First up, Scenario A. This is the desperate defensive move. The US government could just declare silver a strategic metal and completely ban all exports. The source claims this would basically shatter the global market. Prices in the West might be frozen, but everywhere else in the world they would just explode.
Then there's Scenario B, which the source says is the most likely. It's called the market reset. Basically, the US capitulates. It lets the price of silver rocket up to its true physical value, which would close that arbitrage gap we talked about. The only problem, it would also severely devalue the dollar in the process.
And finally, we have Scenario C, the most catastrophic of them all, a total systemic failure. This is where COMEX, the main exchange for silver futures, is forced to admit it can't deliver the physical metal it promised on all its contracts. If that happens, the entire paper market for silver could just die.
And that really brings us to the final, lingering question this theory leaves us with. Are all these data points, the price gap, the hidden gold, the industrial shortage, are they truly signs of a coordinated financial attack? Or are we just witnessing the start of a whole new chapter in global competition, one where power isn't measured by debt, but by cold, hard, physical collateral? And that, in a nutshell, is the core of the Great Silver Trap theory.